You're seeing the headlines, you're hearing the news, and it's making you wonder, will home prices crash? Will interest rates spike again? Should I hold off on buying or selling? Well, here's what you need to know. On March 12th, the Bank of Canada just cut its key interest rate by 25 basis points to 2.75%. That's the second rate cut this year, and it's the seventh rate cut in a row. Why? They're citing trade uncertainty with the US, and new tariffs are expected to slow economic activity and increase inflationary pressures in Canada. But what does that mean for you as a home buyer or a seller? Today, I'm going to walk you through a three-step framework to help you make the right move, whether you're buying, selling, or just trying to figure out what the heck is going on and what might be next. Let's dive in. What's your real concern? First, let's get to the real concern. When people say they're worried about tariffs or market shifts, what they usually mean is, I don't want to buy high and sell low. I'm afraid of the unknown. I don't want to make a mistake. And that's completely understandable. Buying or selling a home is one of the biggest financial decisions that you'll ever make. So here's what you do. Ask yourself this. Am I more concerned about home prices going up or the overall economy? Here's the reality. With interest rates dropping, borrowing is getting cheaper. That means better mortgage rates and potentially lower payments for the homeowners. So, if your biggest concern is affordability, the rate cut might actually work in your favor. How long do you plan on owning? The market goes up and down in the short term, but the real estate isn't a 3-month decision. It's a 5 to 10-year game. If you're moving because of a job, family, or lifestyle, the bigger risk isn't buying, it's waiting too long and missing out on the right home. Here's what you need to think about. If home values go up because construction costs rise, waiting could cost you more. If they dip, history shows they recover. So, am I making a decision for 6 months or am I making a decision for 6 years? With rates dropping, this could be a great time to lock in lower mortgage rates before potential inflation pressures push them back up. And finally, step 3. What's the worst case scenario? Fear disappears when you have a backup plan. So ask yourself, if I buy now and prices drop, number 1, can I still afford my monthly payment? Number 2, can I stay in the home long enough for the market to rebound? Or number 3, do I need to sell ASAP or do I have some flexibility? A great way to think about this is, if prices shift, what would that mean for me? If this home is truly the one that I love and can afford, does that change anything? With rates coming down, your mortgage payments may be lower, meaning the more of your money is going towards the principal rather than the interest. That is a huge win for long-term homeowners. So here's the takeaway. You don't need more headlines. You need clarity. You need a plan that works for your life, not just what the news is saying to you. And most importantly, knowledge is your superpower. The more you understand the market, the better decisions you can make. That's where we come in. At the Trilliant Real Estate Group, we are fiercely local. We live here, we work here, and we understand this market inside and out. So whether you're thinking about buying, selling, or just want to have a conversation about what might be next, please reach out. Let's chat about your goals and the best strategy for you. Thanks for watching. I'll see you next week.